Hello everyone, welcome back to this week's Technical Insights. Global equity markets ended last week of September, extending their gain for a third consecutive week. The Dow Jones Index climbed to a fresh record high on Friday and digested the latest PCE data that pointed to further progress in the lowering of inflation. The 30-stock Dow Jones Index added 137 points or 0.33%, ending at 42,313 points. The blue chip index posted a record close on Friday and reached an all-time high as well during the session. The S&P 500 trickled down 0.13% to 5,738 points, while the Nasdaq Composite lost 0.39% to end at 18,119 points. A 2% decline in Nvidia weighed on the tech-heavy Nasdaq Composite Index as well. Major averages each extended their gains to a third week, with the S&P 500 and the Dow rising 0.6% for the period. The Nasdaq Composite was the best performing among the weekly winners among the three US indices, advancing nearly 1% for the week as well. Investors got an encouraging PCE inflation data that could give the US Central Bank more reasons to confidently cut interest rate further. The August Personal Consumption Expenditure Index, Fed preferred measure of inflation, increased only 0.1%, matching expectation from economists. The PCE increased by 2.2% at an annualized pace, below the 2.3% forecasted. Policymakers and investors are hoping for persistent cooling in the monthly inflation figures, allowing the continued easing of borrowing costs that will ease the strain on corporate and household balance sheet. With the PCE data showing inflation is now under control, the US Fed can now focus entirely on the labor market, which means further and even larger rate cut could be possible. Thursday initial jobless claim fell more than expected into the latest week, indicating a strong labor market, while the final reading of the second quarter US GDP came in at a healthy and robust 3%. In Asia, Hong Kong stocks surged for the fourth consecutive day amid record trading volume, reclaiming the 20,000 handle and registering the best week in 26 years, as the buying spree went into overdrive after Beijing injected fresh fuel into the Chinese economy. The Hangseng Index jumped 707 points or 3.55% to 20,632 points at the close of Friday trading, the highest level since April 2023. This brings the weekly gains for HSI to 13% for the week, as the best rally since 1998 October, restoring more than $440 billion into the value of Hong Kong stocks. The Hang Seng Tech Index jumped 243 points or 5.78% on Friday to 4,453 points. For the week, the Hang Seng Tech Index rose more than a staggering 20%, with e-commerce giant Alibaba Group Holdings advancing 4.9% to Hong Kong dollars $102.50. Its rival JD.com also surged 9.7% to Hong Kong dollars $152, and online travel agency Trip.com rallied 12.6% to Hong Kong dollars $474. In the latest move to boost the economy, the PBOC cut the RRR rate for all banks by 50 basis points on Friday to create a favorable monetary and financial environment for stable economic growth. With these stimulus measures, I believe we have already seen the bottom in the Chinese markets, and investors should start looking at repositioning some of their portfolio back into the Chinese markets. In Singapore, our STI index closed lower on Friday. The STI index was down 0.25% or about 9 points to 3,573 points. This is STI's fourth consecutive losing session since testing the 2018 high of 3,641 points on Monday and Tuesday. The technical indicators on the daily time frame has gone into the overbought territory last week, so it's not a surprise to see a technical pullback this week. For the week, our benchmark index lost about 50 points or about around 1.4% after reaching a 6-year high on Tuesday at 3,652 points. This will be STI's first losing week in 7 since the low of 3,198 points that we saw in early part of August. Year to date, the STI is still up about 10%, lagging behind some of the major US and Hong Kong index, which are up about 20% so far this year. DFI Retail Group continued to rally, ending Friday as the top gainer. It closed up 9.5% or 19 US cents to US $2.18. Our three local banks surrendered their gains for last week, with DBS the second biggest loser on the STI index. As predicted in our weekly technical insight last week, you can still rewatch that video on our SIAS YouTube channel. DBS shares was down 1.83% or 70 cents on Friday to close at $37.60. On the other hand, OCBC lost 0.8% or 12 cents to $15.11, and UOB was down 0.4% or 14 cents to $32.22. Yangzijiang Shipbuilding was the biggest loser, closing down 6.3% or 17 cents to $2.51 on Friday. So for this week's analysis, let's look at top gainer DFI Retail Group. Last Friday, DFI Retail Group closed up 9.5% or 19 US cents to US $2.18. We have been covering DFI Retail Group for some time now on our weekly technical insights. The latest video where we analyzed DFI Retail Group was on the 5th of August last month. In that video, we noted that the MACD line then was converging towards the signal line, and this is an indication that the downtrend momentum that we observed since the beginning of the year is subsiding, and it's also an indication that we could be in a near-term bottom. The RSI reading then was around the 43 points level, which is also a significant improvement indicating an uptick in momentum. With the MACD indicator signaling a near-term bottom and the RSI suggesting a possible range-bound formation, we reiterate our view then that the previous year-to-date low around the $1.75 level continued to be a level of accumulation, with the 50 days moving average, the blue line that you see here, at $1.86 and the upper bound of the Bollinger Band at $1.89 as possible resistance level in a range-bound kind of formation moving forward. Now in September, we can see that the DFI share price had hit and achieved our previous target. The share now has also broke above the range-bound channel and also breached the long-term moving average, which is the 200 days moving average, which is the red line here at $1.98 right now. This is a strong signal that DFI had broke out of its long-term downtrend and is likely to start a new uptrend right now with the formation of a new higher high and a new higher low. The next resistance for DFI share price could be the April high of $2.18. Looking at the indicators, the MACD now has a very strong positive reading, with the MACD line clearly diverging away from the signal line, showing very strong uptrend momentum. The latest RSI reading at 71 had breached the 17-point overbought mark last Friday, signaling a bit of euphoria in DFI share price right now. So a short-term technical pullback or a correction may happen soon. With the MACD indicators showing uptrend momentum, investors should capitalize on any short-term technical pullbacks, and the first support level could come in at the 200 days moving average in red at $1.98, with the green color line, the 20 days moving average in green at $1.88, the next support level as well. And investors can target the next resistance level in April of $2.18. And these are the updates that I have for you this week. I hope you found this information useful, and do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.